Hello. ARK Invest and Cathie Wood have loaded up big again on Palantir in the last two trading sessions, totaling over 1.7 million additional shares to their ARKK Disruptive Innovation ETF. It has now climbed all the way up to the 27th position in ARKK, and that is just simply huge. In the words of Cathie Wood, let's take a look at why she is loading the boat on Palantir and why I think she has given me even more conviction in my position on Palantir moving forwards long term.
When investors and speculators are selling our stocks, creaming them, our highest conviction stocks, we won't be buying them. When they are hyperventilating about our stocks, we will be selling them. We will be taking profits because we know there will be another source of controversy. We'll get another bout of volatility.
Keep it simple.
DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technology, they have all gained so much more traction during and because of the coronavirus than we could ever have imagined.
You are a student of disruptive innovation. Everything you do, the genomic revolution, industrial innovation, next generation internet, we're all about that. Why don't you disrupt the financial services industry? Because it's broken. It's broken, and it has to do with this idea of allocating capital to its highest and best use. You do not do that by investing in the past. You do that by investing in the future.
During times of corrections, when the pressure's on, when the markets are unsettled, the economy's unsettled, people are fearful, CEOs and CFOs start thinking about cutting costs, increasing productivity, new products, new services, and it plays right into the hands of disruptive innovation.
Innovation gains traction during tough times. And talk about tough times. The reason it gains traction is because innovation solves problems. Better, cheaper, faster, more productive, more creative products and services. And we have a lot of problems right now.
And from a timing point of view, we want to make sure that we're ready for prime time. So we ask the question once we figured out the cost decline, okay, for every percentage point decline in price, how much does demand increase? Are we ready for prime time? So in the late 90s, if we had asked that question about most of these technologies, the answer would have been no. And yet investors were chasing them and valuing them on eyeballs and other such things. Today, they are happening. We're ready for prime time. And the fear I see out there when it comes to volatility or disruption or anything that's not in an index is palpable. That's the real opportunity. The dream was too early. Anyone who chased it got burned. Today, they're afraid. They should be moving into it. We are focused on disruptive innovation that cuts across economic sectors. Because there's so much of a siloing activity that's taken place because of how our industry has evolved, if a disruptive innovation is cutting across sectors, the odds are we are going to find it before these analysts do. We are looking for it. So we think that the inefficiencies in the business are disruptive innovation is not priced correctly because people don't understand how big the ultimate opportunities are going to be. They're not sizing the opportunity, they're not analyzing the disruption.
So 100 PE frightens them.
Our investment style is all about disruptive innovation, the new creation.
I often say, I think that Amazon is a $1 trillion stock. It's $240 billion right now. Jeff Bezos has said that Amazon Web Services will be bigger than the retail services at some point in the future. So right now, it's at a $7.5 billion run rate, Amazon Web Services. The retail is nearly $100 billion. That's a long way to go. What he doesn't tell you is this is going to be 4 to 5 times as profitable. So we're talking about a $240 billion cap company. I really believe Amazon owns infrastructure as a service. Others are trying to compete. Open source is trying to compete with OpenStack. There are probably going to be 2 players, but Amazon owns that space. This is a $1 trillion idea. I think people are missing that. And what they will, and you can talk about 100 PE. This is probably 200 PE. They've made very little money over the years because they've reinvested against these fantastic opportunities. And those companies who have not invested are not going to be the winners. The companies that have been invested, that have these enormous multiples seemingly right now, are going to be the winners.
Since I started the firm, 4 major risk-off periods, which are really hurt my strategy. So they were associated with fear of a China bust, the oil bust, Fed tightening, and the latest is Brexit. Those are I mean, you would have, if you knew that we were going to have 4 risk-off periods within 18 months, you would have never started this company. You would never have. And yet it has made us stronger. We know what we're doing is the right thing.
Viewers, why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, you know, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here.
So disruptive innovation is characterized by controversy and volatility. And so we know we're going to get opportunities to buy stocks. We lie in wait for those opportunities. Many people think of, because of what we do, disruptive innovation, that we're momentum driven. Absolutely not. We lie in wait. So if you just take Tesla alone, 2018, you're right, the roller coaster. If you take away the performance of the stock, which was up last year, just take that away and just look at what happened, what we delivered in alpha because of our trading around controversy. We delivered 175 basis points just from Tesla. And we get opportunities like that throughout the portfolio.
And I think that's...
In the last 15 years, the benchmark has become even more important because tech and telecom bust in the early 2000s, financial meltdown 0809, our business the people in our business have basically moved closer to their benchmarks. They're measured by their benchmarks, they define risk by their benchmarks, and so they're investing really very close to their benchmarks. Benchmarks are where they are, so the stock market indexes are where they are because of what has happened historically. I believe the message I was getting and the way I'm living is that I had to abandon that and actually invest in the future, which I've always done. Now, investing should be about the future, right?
Range, you as a trader and investor, but as a trader also, understand that when you build a base like that, one of 2 things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
Thank you for watching this short supercut, which I hope you found insightful, and I hope you got a sense of what I get from understanding the reasoning behind the buying frenzy of Palantir by ARK Invest. As a Palantir investor myself, please do take this video with a pinch of salt. If you are interested in other EEPG stocks that I have in my Freedom portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am the Simple Trader. I try to keep this simple and will simply see you next time.